the most famous index is the S&P 500, which has the 500 top American companies weighted by their market capitalization. In this video, I'm going to walk you through why the S&P 500 is so popular, and we're going to look at some of the downsides too. Then we're going to answer how you can invest in the S&P 500 from Belgium and discuss 3 different ways of doing so. So the S&P 500 stands for the Standard & Poor's 500 Index. So as the name suggests, it seeks to track the performance of an index composed of the 500 largest American companies. So through the S&P 500, you actually get exposure to a large section of the US economy, as it covers 80% of the total American market cap. So its popularity, it just continues to grow as the US economy continues to perform extremely well. It's an easy way for index investors around the globe to buy a large chunk of the US stock market in one go. And as you can tell from this graph that produced via backtest, is that the S&P 500 has returned an average return of 10.8% per year since 1992. That's quite a significant return on your investment if you began your investment journey in the early 90s. So how do you actually buy the S&P 500? So you can't directly invest in the S&P 500 because it's an index, but you can invest in one of the many funds that use it as a benchmark and follow its composition and performance. So as a Belgian investor, you can buy shares in an ETF, that's an exchange traded fund that tracks the performance of the S&P 500. So the first step is to explore justetf.com, which provides you with a complete rundown of different ETFs available to Europeans. One search for S&P 500 brings so many results, and it kind of can be daunting at first. But how do you actually know which S&P 500 ETF to buy? So ETFs can have different tax implications for Belgian investors. As there are so many options where you can buy the S&P 500, we follow a set of criteria as Belgian investors in order for us to choose the best ETF. So the first one, it's got to be accumulating. So there's no capital gains tax for stocks in Belgium, but there is a tax on dividends. So it's preferable to invest in an accumulating fund. If you choose a distributive version of the ETF, you're actually liable to pay a 30% tax on all dividends. Secondly, it's got to be domiciled in Ireland. It's important for Belgian investors to choose a fund that is domiciled in Ireland so you won't be double taxed. We actually dig deeper into the criteria in an article on what to consider when you're buying an ETF. I've linked it below in the show notes, so take a look at that. So one of the ETF that fits our requirements is the iShares Core S&P 500 Accumulative ETF. It's offered by iShares. They're one of the largest fund providers in the world. And you can see from the screenshot, we've highlighted in red the criteria that we were after when choosing the ETF on justetf. So buying the ETF with Bolero is our goal. As you can see, investors, you have to go through a broker in order to buy ETFs on an exchange. So Bolero is going to be our broker. We bought the S&P 500. We just did a search through the ISIN code, and this is the easiest way for you to find the fund. So you'll notice there's only one exchange where the ETF can be purchased from. That's the Euronext Amsterdam, so that's the Amsterdam Stock Exchange. And so you'll have to actually pay a couple of things when you're buying your fund from Bolero. So first is the broker fee, so it's €7.50 for this transaction, whether you buy one share or several. And secondly, you have to pay the transaction tax. So every time a transaction takes place, either buying or selling, you need to pay the Belgian state a fee. For this ETF, the transaction tax is 0.12% of the total price of the share. So we explained in detail how to calculate the transaction tax of an ETF. Again, I've linked it in the show notes. So once you're ready, click buy and you have purchased your ETF. So congrats. So what we're looking at now is the downsides of an investment in the S&P 500. So the first one is you're concentrated in the US stock market. So the US stock market has performed exceptionally well during the last 50 years compared to the majority of other countries in the world. But the past does not guarantee future returns. The American economy may continue to do well over the next 50 years, but it also may not. So betting on one single country like the US, no matter how dominant its market is at the moment, increases the likelihood of a bad outcome. Secondly, the second downside is that it only has the largest companies. So the S&P 500 is made up of only the top American companies. But good investment returns can actually be achieved in mid-size and smaller companies too. So when it comes to the size of a company, a similar argument for diversification can actually be made. So thirdly, the third downside is volatile. So lastly, the stock market is volatile, so it may not match your risk profile. And we've previously actually written about the importance of bonds and their role in your portfolio. And really, when you're doing your asset allocation, you want a portfolio that helps you sleep easy at night. Putting all your eggs in one basket is probably not ideal, especially if the economy of that country starts to falter. What are the alternatives to the S&P 500? So we've mentioned already that the index isn't as diversified as we would like, so it's possible that the next conquering, dominating country won't actually be the US. So an investment in the S&P 500 means you'll pass up on a great opportunity for higher returns. In terms of alternatives for Belgian investors, the first one is IWDA. So the MSCI World is an index that tracks over 1,500 large cap companies from 23 developed countries. This also includes the US, Japan, Germany, Australia. And compared to the S&P 500, the MSCI World is actually more diversified geographically, but it also exposes you to other countries besides the United States. It does invest only in the largest companies too. The second alternative is VWCE. So this is the FTSE All World Index, and it's also known as the Vanguard FTSE All World Accumulation ETF. So it's most commonly known by its ticker, VWCE. It's one of the most popular ETFs with Belgians, and it actually tracks the FTSE All World Index. So as its name suggests, this index is global. It consists of over 4,000 companies from more than 40 different countries. Furthermore, it contains both large and mid-sized companies from both developed markets, but it also puts in emerging markets too. So we're talking Brazil, China, Chile. So VWCE offers great diversification in a single fund. And there aren't many ETFs that are more diversified than VWCE. So we've actually recorded videos about it, and I'll have it linked in the show notes, because as a Belgian investor, it's really important that you learn more on this topic. So the third alternative is Curvo Growth. So this is an option really for Belgian passive investors to invest through Curvo. In particular, the Curvo Growth portfolio is significantly more diversified than the S&P 500. It's composed of two funds, both offered by Vanguard, with the combination being similar to the FTSE All World, which is the index of the VWCE tracks. So the two are the FTSE Developed All Cap Choice Index and the FTSE Emerging All Cap Choice Index. I put in some icing codes there for you to check them out. But Curvo Growth is really more diversified than the S&P 500. First of all, the indexes in Curvo Growth have really a global outlook, and they include smaller companies too. So as a consequence, when you invest through Curvo, you're investing in over 7,500 companies spread across 40 countries. This is in comparison to your 500 companies in the S&P 500 ETF. So this allows you to broaden your investments and not make a single bet on one country. Sustainable investing is super challenging because everyone has different beliefs and values. The funds which are chosen in Curvo Growth focus on one guiding principle. They don't invest in companies that are considered destructive to the planet. So this means the following sectors are just completely excluded. We're talking about non-renewable energies, nuclear power, fossil fuels, vice products. So we're talking about adult entertainment, alcohol, gambling, tobacco, weapons, obviously civilian firearms, military weapons, and also they exclude controversial companies that don't meet the labor, human rights, environmental, anti-corruption standards which are defined by the United Nations Global Compact. And so this is in contrast to the S&P 500, which doesn't have any sustainability criteria. And one bonus with going through Curvo Growth is that the Belgian transaction tax is not applicable for the funds used in the portfolios. This means you're saving between 0.12% and 1.32% per transaction, depending on the ETF you choose. And Curvo also works with fractional shares. So this means that all your money is invested. So when you're actually buying your own ETFs, you're required to buy whole units of shares. For instance, if you buy the S&P 500 ETF, you'll notice that the price just recently in March 2022 crossed the 400 euros price per share. This means that actually if you invest 150 euros per month, you won't be able to buy the S&P 500 for the first 2 months. Instead, you're going to have to wait until the 3rd month to buy your first share. And then you'll actually be left with some cash on your brokerage account. You don't encounter these issues with Curvo Growth, so you can start investing from the first month from 50 euros, and every cent is going to be invested for you. So the price of using Curvo is, more expensive than buying ETFs through a broker yourself. It costs 1% all in for the service on your total investments. So this actually provides you with peace of mind as the rebalancing is taken care of and your portfolio is always kept in line with your goals, but also your financial situation. You can set up a direct debit so you can send monthly contributions, and this is really the big advantage because you're putting your investments on autopilot. So to conclude, the S&P 500 index is still a great way to invest, and it's historically provided significant returns to their investors. The main downside is that you're essentially betting on the United States. No matter how dominant its market is at the moment, investing in a single country actually increases the likelihood of a bad outcome. It's a better mindset to maximize diversification when you're putting together your portfolio. So through IWDA, VWC, and Curvo Growth portfolio, we've shown you 3 different ways to invest that are similar to the S&P 500 index, but have a more global exposure. All right, thanks for watching. Please hit that like or that subscribe button and leave some comments. I'd love to learn how you're investing in the S&P 500.